Assalamu alaikum and good morning, everyone. Welcome to our forum discussion on the Islamic capital market. My name is Nurul Isa binti Yasmin, and my partner is Nurafifa Izati binti Lasmo. We will be your moderators for this session. We are honored to have a distinguished panel of experts here today to provide their perspectives on this important topic. Before we start our session this morning, let me introduce to all the panelists in today's session.
Hi and a very good morning. I am Mazoon binti Abdullah from University Malaya, UM.
Assalamu alaikum and hi everyone. My name is Nuran Diana binti Madfarul Aswad. I'm from University Pindita Consultant Idris, UPSI, and I'm glad to be here this morning.
Assalamu alaikum and very good to everyone. My name is Nur Fidaya binti Kamaruzaman, and I am honored to be your panelist from University Utara, Malaysia.
I am Nurin Afrina binti Norizal from University Science Malaysia Azam, and I was the fourth panelist in this forum session.
Hi and assalamu alaikum to all panelists and our beloved moderators. My name is Nelisa Nabiha binti Mohammed Ishaq from University Sains Islam Malaysia, USIM. Nice to meet you.
Hi and assalamu alaikum to all of you. I am Lole Lachalain binti Karil Nizam as the representative of University Islam Antarabangsa Malaysia, UIAM.
Thank you for joining us today. We'll start with a brief opening statement from each panelist, followed by a series of questions. We will also include time for audience questions near the end of the sessions. Let us get started.
Before we start our forum in detail, let me explain about our topic today. Islamic Capital Market (ICM) transactions are carried out in ways that do not conflict with the conscience of Muslims and the religion of Islam. Here, there is an assertion of religious law so that the market is free from activities prohibited by Islam such as usury, riba, gambling, maisir, and ambiguity. Here the ICM is a component of the overall capital market in Malaysia. It plays an important role in generating economic growth for the country. The ICM functions as a parallel market to the conventional capital market and plays a complementary role to the Islamic banking system in broadening and deepening the Islamic financial markets in Malaysia. To this day, Malaysia's ICM remains a compelling destination for all stakeholders. I would like to invite each of our panelists to give a brief opening statement, starting with Mazoon binti Abdul.
Thanks, Ms. Moderator. The Islamic capital market has seen substantial growth, with a wide range of products like sukuk, Islamic funds, and equity markets that comply with Sharia principles. Despite the growth, there are issues such as standardization, liquidity, and public awareness that need more attention.
Panel 1. What are the primary liquidity issues in the Islamic capital market, and how can they be addressed?
Liquidity is a significant concern due to the limited secondary market for Islamic financial products. To improve liquidity, we need to develop more robust secondary markets and enhance market-making mechanisms.
Can you suggest more other issues in ICM?
Regulatory frameworks differ widely, which can hinder market growth. There is a need for greater harmonization of regulations and collaboration among regulatory bodies to create a more cohesive global market.
Panel 1. How important is public awareness and education in the growth of the Islamic capital market?
Public awareness is crucial. Many potential investors are unaware of the benefits and principles of Islamic finance. Increased education and marketing efforts are necessary to build trust and attract a broader investor base.
We now open the floor to questions from our audience. Please state your name and your question clearly.
Hi, my name is Nuran Diana and I am panel 2. What steps can be taken to harmonize Sharia standards globally?
Thank you, panel 2, for your question. Establishing a global Sharia board or a central regulatory authority can help harmonize standards. Collaboration among existing Sharia boards is also essential.
Hi, I am Nelisa Nabiha and I want to ask about how smaller Islamic financial institutions can compete with larger, conventional ones.
Smaller institutions can focus on niche markets and offer personalized services. Strategic alliances and leveraging technology can also help them remain competitive.
Thank you, Mazoon binti Abdullah. Now we move to Nurin Diana binti Faril Aswad and Nur Fidaya binti Kamaruzaman. Go ahead.
Thank you, panel 1, for your thoughts on issues in Islamic money market. Now I will continue the discussion with the challenges in the Islamic money market. Speaking of international money market issues, challenges in Islamic finance also occur in providing modern financial services without violating Sharia, Islamic law. One of the challenges is that management cannot arbitrarily attract customers. Islamic banks, in contrast to conventional banks, which offer interest-based products such as loans and mortgages, rely on Sharia-compliant contracts such as sukuk, bonds, and musharaka, partnership. It is possible that this will make them less appealing to certain clients because it restricts the range of financial tools that they are able to provide.
Oh, now I know why there is challenges occurred in Islamic money market, but panel 2, can you state some further explanation to support your statement?
Sure. In addition, products that comply with Sharia law may be more complicated than those that are normal. Investments and teaching consumers about these products, their dangers, and the possible profits they offer are something that Islamic banks need to make. Furthermore, when it comes to investing, Islamic banks often offer profit-sharing incentives. This indicates that the return moves in a manner that is dependent on the performance of the underlying business activity. It is possible that customers who are accustomed to receiving guaranteed interest rates from conventional banks would find this arrangement less satisfactory.
Then, why is it so difficult for conventional banks to implement risk management and diversification techniques?
The precepts of Sharia create restrictions on investment opportunities, which may make it more difficult for conventional banks to implement risk management and diversification techniques. In order to strike a balance between providing appealing returns and effectively controlling risk, Islamic banks need to be creative while adhering to the norms of Sharia jurisprudence in general. Islamic banks are confronted with a distinct obstacle. In addition to maintaining their competitiveness in the financial market, they are required to adhere to the norms of Sharia. It is necessary to innovate in the areas of product creation, client education, and deposit management in order to achieve this goal while simultaneously ensuring profitability and mitigating risk.
Overall, Islamic financial products are based on Sharia law. They may be more complex than traditional financial products. Customers must be informed of the dangers, benefits and possibilities of this item. Another challenge is that Islamic banks often provide profit-sharing plans such as Mudaraba. The performance of the underlying business activities determines returns. This structure may be less predictable for customers used to getting interest rates than traditional banks. However, conventional banks face other problems. As Sharia law limits investment options, conventional banks find it difficult to apply risk management and diversification strategies. To comply with Sharia law, conventional banks must strike a balance between risk management and competitive returns. Islamic banks have special challenges because they have to uphold the Sharia law correctly in addition to being competitive in the financial sector. From our discussion, I also found that conventional banks also face the issue of Sharia law that limits investment options, which creates problems for traditional banks. Therefore, to comply with Sharia law, conventional banks must strike a balance between risk management and competitive returns.
Based on the challenge we've discussed, what factors does Islamic bank management need to consider when attracting depositors?
The management of Islamic banks is required to maintain a balance between maximizing profits, reducing risks, and providing adequate liquidity. They can't just concentrate on generating deposits. They have to make sure that those deposits can be invested profitably in accordance with Sharia principles and that they can be withdrawn whenever the customer requires it.
Then, how does Sharia compliance impact customer deposits in Islamic banks?
Sharia principles prioritize the distribution of profits and the sharing of risks. The bank may not process a deposit withdrawal immediately, as it must verify that the underlying investment has reached maturity or has been sold. Islamic banks do not provide quick access to deposited funds, unlike conventional banks that offer interest-bearing accounts.
Now, I will continue to discuss another set of challenges faced within the Islamic money market. There are various potential risks within the Islamic money market that could greatly impact profit levels. First and foremost, credit risk is a significant concern because if a counterparty defaults, it can lead to financial losses. The potential risks are especially obvious in the Islamic finance sector, where defaults can have a significant impact on both individual transactions and the overall financial system, given the principles of profit and loss sharing. In addition, market risk is greatly influenced by fluctuations in interest rates, foreign exchange rates, and commodity prices. As a result, changes in the market can directly impact the value of investments, potentially leading to financial losses. It is crucial to consider the matter of liquidity risk. Swiftly converting assets to cash without generating major losses can cause disruptions in financial activities, especially in markets that rely heavily on short-term funding. Islamic financial institutions often face unique challenges in managing liquidity due to the limited availability of Sharia-compliant tools for liquidity management. Furthermore, operational risk can arise from internal processes, system failures, or human errors that lead to financial losses. Risks such as fraud, system failures, and compliance incidents can seriously risk the stability and reputation of financial institutions. It is crucial to carefully evaluate and control each of these potential risks in order to maintain a steady level of profitability.
You touched on market risk influenced by interest rates, but since Islamic finance avoids interest, how does this impact their market risk?
Although Islamic financing does not include interest, market risk does exist and is affected by other factors such as foreign currency rates, commodity prices, and equities market fluctuations. Islamic financial institutions handle these risks with Sharia-compliant hedging products such as Islamic forwards, options, and swaps. They also diversify their investment portfolios across industries and regions to limit risk to a particular market. Furthermore, profit and loss sharing arrangements, such as Mudaraba and Musharaka, divide risk between the financial institution and its customers, aligning their interests and decreasing the effect of volatile markets. This multifaceted strategy guarantees that Islamic financial institutions may successfully manage market risk without implementing interest-based offering.
Thank you to the both of you, and now we are pleased to have Nurin Afrina binti Norazil deliver her thoughts. So everyone, I've been reading up on Islamic markets and their influence on society. I find it fascinating how principles like profit sharing, risk distribution, and the prohibition of interest, riba, create a different economic environment compared to conventional markets. What are your thoughts on the positive and negative impacts of Islamic markets on society?
Great topic, moderator. I believe Islamic markets can promote more ethical business practices. Since these markets operate under Sharia law, they emphasize fairness and social justice. The prohibition of riba ensures that transactions are free of exploitative interest rates, which can reduce the burden of debt on individuals and promote more sustainable economic growth. I will discuss two positive impacts of society. The first is ethical financial activities, as riba, interest, and ghera, speculation, are forbidden in the ethical Islamic market. Financial transactions become more stable and transparent as a result. By preventing wealth from being concentrated in the hands of a small number of individuals, the prohibition on interest advances economic equality and justice. Furthermore, the Islamic market places a strong emphasis on social welfare and donations through zakat, or required giving, as well as various types of giving, sadaqah. This is the second good influence. By ensuring that resources and assistance are distributed to those in need, this approach promotes social cohesiveness and lowers poverty levels within the community. However, the Islamic market can also have negative impacts on society. I will list two of these negative implications. The first is that Islamic financial principles can be restricted, which may reduce the variety of investment possibilities available to market participants. While the range of financial goods offered in the Islamic market may be restricted because to the prohibition on interest and speculative instruments, this may result in financial services that are less innovative and flexible, which could impede the growth and development of economies in regions that rely heavily on traditional financial instruments. The second adverse effect is market fragmentation, which can result from the establishment of distinct Islamic and conventional financial markets and lower efficiency and liquidity. Companies that operate in Islamic marketplaces may find it more difficult to compete due to greater transaction costs and restricted access to international financial resources. Overall, society is impacted by the Islamic market in both positive and negative ways. Even though they support social justice, ethical standards, and environmentally friendly business operations, they could also run into issues with inclusivity and restricted financial possibilities. Policymakers and market players should take these things into account when evaluating how the Islamic market contributes to the development of a more wealthy and just society.
Afrina, may I ask you, how does the implementation of Islamic money markets influence economic inequality in countries that adopt them?
In my opinion, implementation of Islamic money markets influences economic inequality in countries that adopt them by ensuring fairness in financial transactions and prohibiting usury. Islamic money markets can mitigate economic inequality by ensuring that wealth is distributed more equitably and not concentrated within a specific group.
Thank you for your insights, Afrina. I agree that the principles of fairness and the prohibition of usury in Islamic money markets can play a significant role in reducing economic inequality. By promoting profit and loss sharing and ensuring that wealth is not concentrated in the hands of a few, these markets can help create a more balanced economic environment. However, I'm curious about the practical implementation of these principles. How do Islamic money markets address the challenges faced by low-income individuals or small businesses who might still find it difficult to access financing? Are there specific mechanisms or policies within Islamic finance that are designed to support these groups?
That's a great question. Panel 2. Islamic finance does indeed have specific mechanisms to support low-income individuals and small businesses. One such mechanism is microfinance, which provides small loans to entrepreneurs who lack access to traditional banking services. These microfinance institutions operate on Sharia-compliant principles, offering profit-sharing arrangements instead of interest-bearing loans. Another important tool is zakat, the mandatory charitable contribution that can be used to support the economically disadvantaged. Islamic banks and financial institutions often have zakat funds to help those in need, including providing financial assistance and funding for small business ventures. Additionally, Islamic financial products like Qard al-Hasan, benevolent loans, are designed to provide interest-free loans to those who need financial support without the burden of repayment with interest. This can be particularly beneficial for small businesses and low-income individuals overall. These mechanisms aim to foster economic inclusion and help reduce inequality by providing more equitable access to financial resources.
Thank you for the detailed explanation, Afrina. It's encouraging to see how Islamic finance incorporates principles of social justice and economic inclusivity. The microfinance and Qard al-Hasan initiatives sound particularly impactful for fostering entrepreneurship and providing support to those who might otherwise be excluded from traditional financial systems.
Thanks to Nurin Afrina binti Norizal, we may now be welcoming our last panelists, Nolisa Nabiha binti Mohammed Ishaq and Nolay Lachulain binti Khairul Nizam.
Based on the challenges discussed by panel 2, we learned that management cannot arbitrarily attract customers since the products and policies offered by Islamic banks are more complicated than conventional banks. In order to overcome this problem, management can minimize or eliminate fees for services such as account maintenance, ATM usage, and money transfers can make a bank more appealing to potential customers. By offering free access to ATMs, both within the bank's network and across other networks, it can attract customers who frequently need cash withdrawals. For money transfer fees, management can provide free or low-cost domestic and international money transfers can appeal to customers who need to send money regularly.
Panel 3, as you mentioned about low-cost money transfer fees, I'm curious on how financial institutions provide free or low-cost domestic and international money transfers to their customers. Can you explain more about this?
Thank you, panel 1. That's a good question. Before I discuss this further, have you all heard about TransferWise? Wise is actually like Bank to you, which has a similar function to online banking transfer but is more convenient to use if you are a traveler or foreign worker. Based on the question, financial institutions can provide free or low-cost domestic and international money transfers through partnering with fintech companies. This alternative of collaboration with fintechs banks partners with fintech companies likewise to leverage their advanced technology and global networks. These partnerships often allow banks to offer lower-cost transfer services to their customers. TransferWise, also known as Wise, refers to the financial technology that offers exchange money globally with low transparent fees. Directly send and receive money using the real exchange rate and is up to 4 times cheaper than Malaysian banks. For example, if you are a traveler or foreign worker, you might need to send money abroad regularly to your family. This method is convenient and not only helps in reducing the cost of transactions but also in providing faster and more reliable services to their customers. I will continue with the second recommendation, which discussed the potential dangers that could affect the level of profit obtained. As a result, management must develop a strategy to ensure that all decisions are risk-free. In my opinion, to reduce risk problems, management needs to control processing costs. The perspective of more efficient business processes is one reason why banks often underestimate the potential to reduce process costs. By lowering the ratio of cost to unit value for each activity or transaction, such as the price of opening an account, compiling a package of loan documents, or managing certain types of transactions, the bank's efficiency ratio aims to increase. Analyzing, mapping, benchmarking and ultimately reinventing back-office operations are common steps in process improvement in this domain, which require continuous performance monitoring.
In order to improve processing cost, as you stated, conduct analyzing, mapping, benchmarking and reinventing back office. Can you explain more about reinventing back office to continuous performance monitoring?
Yes, sure. First of all, construct automation and digitization, which implement automation tools and digital platforms to handle routine and repetitive tasks. For example, using robotic process automation (RPA) to handle data entry for account opening or loan processing can significantly reduce time and errors. Next, workflow optimization explains reducing workflows to streamline processes. This could involve removing unnecessary steps, consolidating tasks, or changing the sequence of operations to enhance efficiency. Last but not least, Lean and Six Sigma methodologies that apply these methodologies to eliminate waste, reduce process variation, and improve overall process quality and speed.
I realize that there are some issues stated in the article, such as the exploration of the Islamic perspective on the money market and the operation of the Sharia money market. This involves examining the principles and practices that govern financial transactions in accordance with Islamic law, with a specific focus on the prohibition of interest, riba, and the promotion of alternative contracts such as mudhariba, musairaka, al-qard, wadi'a, and al-shaf. Additionally, the article assesses the development of Islamic money market operations and their impact on the liquidity management of Islamic banks in Indonesia. Based on literature published between 2011 and 2021, what are the recommendations you suggest for this issue?
Good question, moderator. As far as I'm concerned, there are a few recommendations that I could state here, such as first, strengthen the Sharia governance. We must enhance the Sharia governance frameworks within Islamic financial institutions to ensure rigorous compliance with Islamic principles. This includes appointing qualified Sharia boards and conducting regular audits. Next is develop robust Sharia-compliant instruments, such as promote and develop a wider range of Sharia-compliant financial instruments such as mudhariba, musairaka, al-qard, wadi'a, and al-shaf. Encourage financial innovation to create new products that meet the liquidity needs of Islamic banks while adhering to Sharia principles. The third recommendation is to improve the liquidity management. We can develop effective liquidity management tools tailored for Islamic financial institutions. This could include creating a central liquidity management facility for Islamic banks, offering instruments like sukuk for short-term liquidity needs, and establishing an Islamic interbank money market. The last recommendation for this issue is education and training. We can invest in education and training programs for financial professionals on the principles and practices of Islamic finance. This will enhance their understanding and ability to develop and manage Sharia-compliant products effectively.
How do the principles and practices of the Sharia money market, particularly the prohibition of interest, riba, and the promotion of alternative contracts like mudhariba, musayaraka, al-qad, wadi'a, and al-shaf, impact the liquidity management of Islamic banks in Indonesia?
The principles and practices of the Sharia money market significantly impact the liquidity management of Islamic banks in Indonesia. The prohibition of interest, riba, necessitates the use of alternative, Sharia-compliant financial instruments. Contracts such as mudhariba, profit sharing, musayaraka, joint venture, al-qad benevolent loan, wadi'at, safekeeping, and al-shaf, currency exchange, are employed to manage liquidity while adhering to Islamic law. These instruments provide Islamic banks with the means to manage their liquidity without engaging in interest-based transactions. For instance, mudhariba and musayaraka facilitate investment partnerships that can yield returns without interest, while wadi'a and al-qad offer mechanisms for safekeeping and interest-free loans. However, these alternatives often require more complex structuring and carry different risk profiles compared to conventional interest-based instruments. The development and adoption of these Sharia-compliant instruments have been crucial in maintaining the liquidity of Islamic banks, allowing them to meet their financial obligations and manage cash flow effectively.
What trends and discussions have emerged in the literature between 2011 and 2021 regarding the development of the Islamic money market and its influence on the liquidity management of Islamic banks in Indonesia?
The literature between 2011 and 2021 highlights several key trends and discussions regarding the development of the Islamic money market and its influence on the liquidity management of Islamic banks in Indonesia. Innovation in financial instruments. There has been a notable trend towards the development and refinement of Sharia-compliant financial instruments. Researchers and practitioners have focused on enhancing the practicality and appeal of instruments like mudhariba, musayaraka, al-qad, wadi'a, and al-shaf to improve their effectiveness in liquidity management, regulatory and institutional support. Discussions have frequently centered on the need for stronger regulatory frameworks and institutional support to facilitate the growth of the Islamic money market. This includes calls for more robust Sharia governance, better standardization of financial products, and increased government and regulatory involvement in supporting Islamic banking infrastructure. Impact of global financial trends. The literature often explores how global financial trends and crises impact the Islamic money market. There is significant interest in how Islamic banks can leverage their unique financial principles to offer stability and resilience in times of global economic uncertainty.
Unfortunately, we're running out of time. I'd like to thank our panelists for their significant contributions and the audience for their intriguing questions. Today's conversation has given us enough about Islamic capital markets.